I have my regular guest, Nerida Conisbee, who's the Chief Economist at REA, better known as, for most people, realestate.com, but it also includes commercial.com.au and
Spacely.
Spacely
as well. So that's our short-term commercial accommodation.
Yeah, so awesome to have you back on the couch.
Thank you.
Thanks for coming on. Hey, it's been since we last chatted, it has been something's happened significant in between.
A lot has happened.
It was the election that no one expected. What did the post-election look like for you when you realised that Stephen Bradbury had repeated on the result?
Yeah, so it was quite an interesting night because I was actually in China and we had taken some of our biggest customers on a trip to China, some of our biggest developer customers. So they were very happy about the result. So, you know, of all industries that has been really struggling, it has been, as a result of the downturn, it has been developers.
Yeah.
So, as you can imagine, they were pretty ecstatic. But, you know, obviously such a unusual thing to have happened, particularly given no poll predicted it. And for property, you know, whatever your side of politics is, for property, it is the best outcome.
Interesting, isn't it, that the developers and anyone who's involved with brand new would have had a short-term bonanza, but they were also playing the medium and the long-term game, and they weren't happy about it. So
yeah, and this is the thing. I mean, I think, you know, the idea was to change the policy to get more development taking place, but you know, if people lose confidence in housing, it is bad news for a lot of groups, and certainly would have been bad news for them.
So, what's your analysis post the coalition victory? What has that meant for you, and what has that meant for your outlook for, you know, we'll talk about property shortly, but just the economy in general?
Yeah, so it was a big milestone, the election. You know, and we were looking at the start of the year, there was two big milestones that could dramatically change the direction of the market. So we had the Royal Commission. You know, the Royal Commission ended up being quite benign, the end result, and then the election, which, if we had seen a change to negative gearing, would have led to continued price falls. So what's been happening on site at the moment is we haven't seen a pickup in search. So we would have, we thought it might happen quite quickly, but, you know, I think on one hand, people in the property industry know what this is likely to mean. You know, we know what a lot of the changes to APRA with regards to regulation will mean. An interest rate cut if it comes, you know, all these changes that are coming through leads to a dramatically different situation now than we were looking at even 2 weeks ago.
Yeah, who would have thought though, like the scenario where, you know, even 2 weeks ago you thought, okay, coalition victory, APRA's going to drop their assessment rate to be floating based on the rate that you're paying, and interest rates are, you know, there's lots of talk around maybe 50 basis points. Have you clearly you would have formed a view. What's your view on interest rates?
Yeah, look, I think there'll be a cut next month. It did look like the Reserve Bank were holding on to the very, very low unemployment rate. So when that kicked up a little bit, I think, you know, that gave them the ammunition to push for a rate cut. I think if we get, I know there's someone came out today saying that would potentially be 4 cuts. I think the economy would be in very, very poor shape to have to do 4 cuts. So, you know, my view at the moment, I think 1 cut. I think if we continue to, if that doesn't sort of flow through like the Reserve Bank is hoping, we may see another cut. But, you know, I think 4 cuts in what would now be quite quick succession is highly unlikely.
Can you help the viewers to better understand that? Because there's a balancing act that needs to be played here, because if you drop interest rates, that obviously gives confidence to people in the property space. So they're trying to balance to make sure that doesn't lift again, whilst stimulating the economy to create some jobs so they get the inflation to the point where they want it to be. So how do you think they're going to play that, given that they've effectively given, and I'm going to ask you about that shortly in terms of whether you see there'll be a bounce in the property, but they've effectively given the conditions that would suggest that people will well and truly get their confidence back for property, but they don't want to see another boom again.
No, they don't want to see another boom. And I think this is why the Reserve Bank and why the government and why APRA, you know, have been saying for the last couple of months, banks, you can lend again, because that was a problem that, you know, banks weren't lending for property, and, you know, the things that have taken place over the last couple of weeks will start to lift property demand. With regard, you know, with the interest rate cut, you know, I think they have been moved. They did move very carefully when the property market was red hot. So that was something that was very, very critical for them to understand what a lift it will give. But I think right now, I don't think they're fearful we'll get back to a 10% plus type environment in Melbourne and Sydney. I think even if the market starts to turn now, which, you know, it probably will, I think it would take a lot more than one rate cut to get it booming into a 10% plus, given that there's so many structural changes that have occurred over the past couple of years.
And there are a lot of people still having scars around the fact
totally.
that they bought up here and they've seen their equity on paper drop. So there'd be people a bit nervous about that happening again.
Yes.
Well, actually, they'd be still reeling from that actually happening to them in their own circumstances now, wouldn't they?
Yeah, and I think that's a shift. I mean, there's been two shifts. Local investors have shifted, so their confidence has been shaken, and there would be a lot of people that have become burnt either because they bought in the wrong spot, or they bought too much, or they geared up too much. Whatever they did, I think there's been a lot of people that are a little bit more nervous. But then there's the overseas investors. So if you go, being in China recently and hearing them talk about Australian property, they really feel like it's a basket case. And so trying to shift that perception will be very, very difficult. So, we've got local investors, we've got foreign investors who aren't going to come back to the same level for a very long time.
Yeah.
But, then owner-occupiers and first home buyers, they'll be pretty happy now.
Are they saying it's a basket case because they can only buy brand new and that particular sector has been hit quite hard, or are they seeing it from a macro view across all markets, across all states, when they're making that basket case?
Yeah, I mean, it's kind of a general view that Australian property has dropped a lot and that it will keep dropping. So if you consider, the 60 minutes type scenario, bricks and slaughter, that's kind of what they hear. So they don't they probably don't hear more that, Hobart and Canberra and Brisbane, they're okay. Sydney, Melbourne, they're probably problematic.
Population's still growing.
So they don't hear the kind of the detail that we talk about all the time. They hear the headlines. And, and they're hearing the headlines of countries around the world. So, when I was in Hong Kong last year, a lot of the investors were saying, we do a sentiment survey. So we say, where would you like to invest if you invest overseas? And a lot of them were shifting away from Australia and thinking Thailand was a good idea.
Yeah.
And, Thailand is, for us, looking at the safety of Thailand and, Australia has, the
we're economically stable, we're politically stable.
So much, there's so much. Whereas, Thailand was seen as a good option. So, I think, their media plays a role too, and I think that's they just hear different things to us, and they hear it more from a global perspective, and Australia's out of favour. What's
the flow-on effect for that from that lack of demand overseas? Because that was in the brand new space.
Yes, it was in the brand new space.
Wasn't in the established space. What do you see having that, whether it's short term or medium term, that demand being sort of channeled to Thailand?
Yeah, I mean, it's an issue for developers because, I mean, if you're looking to get 100 apartments up and running, it has been a good way to get enough pre-commitment to get the funding to get that project up and running. So, you can sell to a number of foreign investors. The banks will lend you, or they cut back on that, but at the time, a few years ago, you could borrow then the remainder and then sell to local buyers. So, the apartment space is one of the most challenged because of that withdrawal. House and land less so, but definitely the new apartments. Yeah. I mean, it's also, the other buyers too, which we're seeing on the North Shore of Sydney, is luxury homes in that area. So it's not, we think it was probably Chinese money buying it, but the person buying it was often a local resident. But again, why would you be buying property in a market that's falling? There was a lot of sentiment shift in that area, and we think it was probably related to that.
Is Sydney at the bottom now?
I think so. We've seen, we track pricing, Home Track, our data company, track pricing every month, and the preliminary data for May shows a stabilisation in Sydney. Last month also looked stable. So I think Sydney's hit the bottom. I don't think we'll see any more falls.
Good opportunity there, I think. Can you tell me your opinion, whether it's REA's opinion or your own opinion? Labor have now gone to 2 elections with needed viewing and capital gains tax exemptions. Is that should that be dead and buried now, or do you think that may sort of lift its head again in 3 years' time? Because the electorate's spoken, but the challenge is that there were so many things that how do you pinpoint that?
I think that when you look at when the policy was introduced, it was at a time we were seeing this enormous investor rush, and first-time buyers were getting pushed out. We saw it clearly through finance data that that the year, I think it was 2015-16 that they announced it.
Yeah, the 60%.
Yeah, it was massive. So, at the time it made not a lot of sense, but it made more sense than it did by the time we hit the election, when investors had already dropped 30% and first-time buyers were back. It kind of didn't make sense. So I think they'll drop it. I just can't, even, I remember writing about negative gearing, 2-3 years ago, and if I said anything about negative gearing, I'd get yelled at, kind of social media version of yelled at by different opposing sides. Whereas now, kind of people don't really care as much.
Yeah.
So I think even from that assessment, I think it's quite likely they'll drop it.
Yeah, well, it all depends on what the market's doing at the time.
It does.
If we were
with policy, trying to do policy and keep up with market trends is impossible.
Yeah,
it's very difficult.
So in terms of the outlook going forward, what cities do you think are showing the most signs of life in cities or regions? And I guess for a lot of people, they forget that there's more than just Melbourne and Sydney in the Australian property market. But I am interested in, you've talked about Sydney, you feel the bottom. Where do you think Melbourne is? And if we do a quick fly around the grounds, what are you seeing?
Yeah, Melbourne's probably similar. Sydney is probably pretty close to the bottom. So I don't think we're going to see, again, this massive return to growth in both of those cities. But, if you're looking to buy, now's probably about right.
Yeah.
Adelaide continues to hold up. I think, it's not, Adelaide's never a market that sees double-digit growth, but it's steady. And if you like a steady investment, that's a good one. I do think time's up for Hobart. We actually saw in May with, prelim data that we've put out, we saw a drop in Hobart. So I think that boom is over. With
Hobart, because it's done a little spike, and this is always our question is, okay, it's done the spike, but what's it going to do for the next sort of 10 years? And historically it's done that and then that.
Yeah.
Do you see any change to that?
It's a funny market. The thing that drove it was the fact that the economy changed quite a lot. So, we went from, the government employment numbers in Hobart have always been incredible. Something like 55% people in Tasmania are employed by the government. And, there's then another high proportion of people working in agriculture. So, it was always like that.
Forestry, retail, tourism.
And then medical, whatever. But then it switched, so we started to see, Mona started up, and then tourism took off, and then the University of Tasmania was suddenly able to attract all these foreign students, and the food and beverage culture ramped up, and Tasmania rapidly changed, and as a result, all this population growth happened. But I think one of the problems for Tasmania, or for Hobart in particular, is that there wasn't then a good response with development. So no development, not enough development took place. And so I think what's going to happen in Tasmania is they didn't keep up with development. It probably will be an issue for them in terms of economic growth, because people were moving to Hobart because it was affordable and they could get a job. Hobart's pretty expensive now. You've got 1 million plus suburbs like Sandy Bay that have never been
beautiful suburbs,
beautiful but expensive. So, but no one's going to be moving there.
Is that right? Sandy Bay's tipped over a mil. Oof.
Yeah, so Battery Point as well.
Battery Point, yeah.
So they're really expensive, and so I think that affordability element's gone. There's not much housing. They're going to struggle to get workers.
What sort of development were you talking about? Infrastructure development or property
housing?
Development?
Housing. There's a rental crisis in Tasmania. So even though there has been a lot of investment coming, particularly from Melbourne, it hasn't really boosted rental supply like they need. It's interesting talking to locals there and people that are working in the market. The education boom in particular has created a lot of demand for apartments or student-style accommodation, but hasn't been available. So what you have is a lot of people sharing homes, and that's not necessarily as efficient as having them in an apartment building.
Interesting. So I guess you bounce. Do you think that we will bounce in major cities, sort of Melbourne and Sydney? You sort of think there's a bit of upwards, but is there anywhere that might get a bounce? Perth, for example.
Yeah, Perth is interesting. I think Perth really started to take off in 2017, and at the time I was over in Perth, like, right, now's the time. And then the Royal Commission hit, and then it all kind of fell in a hole, and got that forecast wrong. But Perth premium has been doing well for ages now, and rental demand's really good. So we are actually seeing some really decent rental growth in premium Perth. So Again, I don't think Perth will bounce as in, take off 10% plus, but I do think now that, we know that premium suburbs are doing well, there will be a ripple effect, that always happens. We know rental demand's good, so that's, suggesting that there are some pretty well-paying jobs being created in Perth. So definitely a market to look at. I think, places like Conisbee or, Shenton Park's always the most popular suburb on our site in Perth. Those suburbs are getting pretty expensive, but, start to move out a little bit, you could probably still get some really good buys there.
Well, so Perth's my hometown,
yes,
right? So
I do have to be careful.
Yeah, well,
being a local.
I really, really want Perth to fly, right? But I just can't, and I'm asking lots of people around this, right? Hence the chat, because I see it being a place that's obviously in the last decade hasn't performed great.
Terrible.
It boomed on the back of selling rocks to China, and so I want to believe, and I desperately want to, but it's just got that isolation. It's over there, and so I've had a look, and you're right that our data is suggesting that the more blue chip suburbs are performing quite well, but they're not cheap.
No, they're not cheap.
So then you got the question of whether I put my money in those suburbs or do I put it into the bigger cities, whether it's Melbourne, Sydney or Brisbane, or even to a certain extent Adelaide, given that they are expecting the big population growth, and particularly Melbourne and Sydney that are world cities with big populations. Yeah. I really do want to believe that, and I feel like it's at the bottom and there's that upside, but for us as within our own business, we're trying to help clients get consistent growth over the journey, not a spike and then a flat line, because it doesn't work as well.
No, it doesn't work as well. I don't know. It is an interesting one. I mean, somewhere like Darwin, I'd say don't touch. So Darwin has, it's a similar experience to Perth, that it was mining led, and but Darwin still there's I can't find any positive signs in Darwin. And Perth, I feel like it's becoming more mixed. It's a growing city. It's a very wealthy city. It's very closely linked to Singapore and parts of Asia in particular. And I think, we can see from search activity that those links are pretty close. I do think the state government makes some funny decisions, one of them being the foreign buyer tax at a time when, there really needed to be something done about foreign buyers. There is a massive problem over there with house and land. We know that a lot of people bought in the boom. They paid a lot of money. They've got very big mortgages, and then they're seeing new homes being developed that are much better than what they own, and they're far cheaper. And so there's a sentiment issue, there's a loan issue, there's defaults issue. Yeah. So there's that structural problem in Perth. But I guess if you'd bought in Conisbee 2 years ago, you'd be pretty happy.
Yeah, well, Conisbee is amazing.
Yeah, it's right? Beautiful. So. If you bought in Conisbee 5 years ago, you're probably still pretty unhappy. So it is, there's always markets that are very, are more safe than others. And if you'd bought eastern suburbs Sydney 5 years ago, you'd still be very happy. But then there's ones that are a bit more risky, and you kind of have to make the call there.
Yeah, you'd have to just look at a life cycle thing too, wouldn't you? Because if you're in your mid 30s or approaching 40 and you invest in that market, and you've got a little bit of time to actually ride some of the fluctuations. But if you were someone who invested in Perth 10 years ago and you were 45 or you were 50, and then you had to ride that out, it's starting to...
Oh, you'd be over it. Yeah. I mean, this is a thing too. I mean, mining towns in general, now they're starting to stabilise.
Yep.
So, but again, if you bought 10 years ago, you'd still be very, very miserable.
Yeah.
If you bought now, you'd probably pick up a decent rental yield. So you could, some locations 10+% rental yield. Flattened out, probably not going to see much capital growth, but if you're someone that's investing for yield, maybe that's a good option. But
that's what it comes down to, doesn't it? Your appetite.
It depends what sort of investor you are, and I think this is the, giving advice is always hard. I mean, your advice is one-on-one, but in general, giving advice can be quite difficult because it does depend on.
And we're talking at the headline level all the time here, so we can't dive in. But I think it's someone who is not risk averse, who's happy to play the long game, who someone who's not close to retirement, who needs that certainty. So it's really just about being really clear on your own sense of investing as to whether that's an opportunity. I definitely think it's the bottom. I still think there's some upside.
It's the timing. And the thing is, like, the Perth recovery, which I have noticed over the last couple of years, is very sensitive. So when we look at what happened when the Royal Commission was announced, it completely derailed Melbourne and Sydney, but it derailed Perth as well. Whereas
which didn't
Hobart,
need it.
They didn't need it. With Hobart, Adelaide, Brisbane kind of didn't do much for them. It didn't affect them as much. Perth was very quickly derailed by that Royal Commission.
All right, I'd like to finish off with you, Nerida, by having a look at some of the data that's on your site. So Ivis is going to help us flick over to the most expensive property sold in the last 7 days. So there we go. Is in Bellevue Hill. 6 better.
Yeah, big one.
For $5.6 million. So as you look through, you're kind of thinking, what am I getting for my 5.6? And
you're comparing something you get in Melbourne, perhaps?
Yeah, absolutely. But if we, but just to be able to get that size of land, Ivis might have to just quickly remind me of the land size. But we'll quickly look at the map there and show you a bit further down. No map on that one because it's the sold listing, but it's a pretty good spot, north facing.
Yeah, Bellevue Hill's lovely. Yeah, it's expensive and lovely.
Say good day to the Packer residents on the way through. So that's the most expensive property in the last 7 days, went for $5.6 million. The most, before we show this one, we're going to show the most viewed auction listing, and I think it's because it went viral. So let's have a quick look. Have a look at that beauty. What I do love about this property is they haven't tried to present it in a better light with a wide angle lens.
They've tried to make it worse.
They've pretty much been pretty clear on what that looks like. But if you go down to, and that's in just in Logan. For those who don't know, it's between the Gold Coast and Brisbane.
I think you're buying the land for that one.
Obviously, if you flick down on 809 square metres, so no small block, but if you go down a little bit further, I'd love to hear, second paragraph, if you're sick of doctored real estate photos or styling to make a property present better than it is come settlement day, rest assured there's none of that here. Well, I think we can agree.
Yeah, it's not the nicest.
All right, so let's have a look at the most viewed residential property for the last week as well. This one's in Doncaster, which is in the eastern suburbs of Melbourne. If you get high enough up on the hill, you get the most beautiful views of the city. Really nice property. I think there's significant butler's pantry. There's a nice little wine cellar, nice furnishings throughout. But when we get to this photo, when I saw that, I thought, oh, I recognise that. So that was on Facebook the other day. I think my wife clicked on that, so I think that might have helped the.
That's Facebook does make listings viral.
Yeah.
Pretty much.
Click through.
Yeah, we know we have to always adjust our most in-demand suburbs for Facebook posts. We take them out because
skews the data.
Yeah, skews the data, which we noticed a couple of years ago that we were getting some weird suburbs in the top list, and we thought, well, we better look at this, and it's Facebook.
And then the final one, Ivis, is the most viewed rental, which is a nice little brick home, 3-bedroom in Adelaide, sort of down for those folks that know it's down in Port Noarlunga Shire, just past Christie's Beach. But a little further investigation, and you were saying before we hit the go button, is the fact that it's an NRAS property.
Yes. So always NRAS properties always top the list for rental searches. So there's a lot of people that really like them. They're a lot cheaper. You can only get them though if you're on a lower income. So there is requirements. But yeah, definitely the NRAS scheme hasn't been overly successful in terms of creating affordable housing, but we know that consumers love the scheme and they love homes that are under the scheme.
Particularly if they can get that sort of house for $280.
Absolutely. Yeah, it makes sense.
So it's always a pleasure having you on the couch, Nerida. Thanks for popping in. What does the next week or so look like for you in the fact that there's no talk about negative gearing? There's no it's just business as usual.
Everyone's talking about the return of the market now. So it's amazing how media switches very quickly. So.
Very good. Well, we'll see you next month when we have you on. We certainly enjoy your unique insights from your point of view, having access to wonderful data with your site at REA. So, folks, if you want to check out more about the Property Couch, you can see that on our website at thepropertycouch.com.au.